Welcome to TradeTheMBI.com. This is Jonas Reports for the 11th. The juggernaut continues. I told you can't fight the Fed, and when the Fed throws money at everything under the sun, there's nowhere to go because with the amount of money they're throwing at everything, there's just no yield anywhere else but here. And growth is still good. They're ignoring coronavirus because there hasn't been a significant multiple outside of China to really dampen U.S. prospects. It could cause some problems for those that are reliant on Chinese products like iPhones and things like that, but it's a little bit later, so worry about that later. And from an NQ standpoint, it's already been stronger. We already saw this from before, and it was no change with cyan below red, DOC strong, rising shakeouts, everything fits within there. However, you do have the markers. When it does start to go sideways, we know where we're coming back to, and that just makes it easy. It's a matter of taking advantage of what you can right here and there, and when it flips, we know where we're going to be going, so that makes it easy to play that as well. We talked about this, the danger zone of when breaking this low, that just creates more and more selling, and boom. And frankly, there just isn't a whole lot of justification for euro even this high. So there's going to be some interesting pain there that will, obviously, that would normally create a serious impact on the S&P, but it's not having as much of an effect because of that Fed liquidity pump. And so this is how that monetizing of excess cash can really nullify some of these, what we would normally see as significant factors. Likewise, this oil making a new low, which means that demand is falling off the charts. This is not about a production thing here. This is literally all China related. From the minute it started, big money started getting out. They had the heads up, and boom, everyone's like realizing, ooh, this is what happens when you're late to the party and you don't see the earlier signals. And from a gold standpoint, that's going to be the defensive play. So it's not a huge spike up kind of situation for gold. It's just one of those where, okay, it's like, okay, I got to take some gains. I'm just going to have to put it somewhere. Let me stick it somewhere here where I'm not going to be hit by global contagion, because even currencies will have difficulties in that kind of a situation where you have panic in that. From an intraday standpoint, it was mostly bullish for the most part. I mean, everything was creating little rock-solid signals off of early selling. We saw this from the futures opening in overseas and that, and then boom, it just pretty much stayed flat. These small little DOC spreads that came in after being down below really had no strength to them. They just really weren't seeing a major DOC drop. The biggest one was right here that came through, but you had an immediate turnaround, boom, you had green over cyan, like instantly, and then that just took off. And then again, we hit right back to the same 237 level, and we plateaued right there. We had a short signal right at it, thought there was potential for that one, and it did have the full reset here, and it just wouldn't do anything, so it literally started to turn around early on, right when it was even. In fact, kind of went green even when it was like right at the flat area. That it was confirmed when there was the meeting between the cyan green with orange dip all at the same time right there, and then that's what led to the takeoff. Right now we're seeing a modest DOC spread, but this one's not likely to produce as much. We do have some, well, a problem with the positive extremes. They come right back to the same general spot right here, so that's not going to change much of anything. The next wave of it was the ones that took place right here, and this is probably the most likely to get filled. Shortest time range around that 33.53 level. We can start to add that. So we have a whole new set of ranges to work with. And we'll give that the orange color. There we go. So we'll see, because what I'm expecting would be to return back to the highs on a lower shakeout, and whether it produces a second or it takes a third lower shakeout to finally produce any type of pullback, then you'll have that there. But for now, still modestly bullish, even with right now you've got steel falling, but you also have cyan fading as well. But the red DOC supporting here above the negative 7.5 is pretty strong from an early standpoint. So we'll just keep going with what is. No complaints with this. The 50K had bought this on the early dip and still with it. So we'll go with that. As always, though, trade well. We'll talk again later.